If you're taking on the role of being a director, you've signed up for a big task.
Making sure companies are paying for performance is the biggest challenge facing compensation committees today.
In this day of instant board transparency, board members must be aware of their legal risks.
Corporate Board Member presents the Board Governance Series with series contributors PwC, Meridian Compensation Partners, and Haynes & Boone, LLP. On this edition of the Board Governance Series, Top 10 Issues for Audit Committees with Catherine Bromilow, Partner, Center for Board Governance, PwC.
In this webcast, we're going to talk about the top 10 issues audit committees are facing, and we're actually going to count them down. So number 10 is the issue of committee effectiveness. One of the most frequent questions we get asked is what an audit committee could be doing differently. And this stems from the fact that audit committees' plates are still so full, it sometimes feels like all they are is doing a compliance exercise. When we actually help audit committees answer the question, one of the things that we see as key for improvement is in the information they get. And particularly the opportunity to improve the quality of that information relates to whether it clearly and succinctly points out for the audit committee where the leading concerns and issues are. So that was number 10. Number 9 has to do with the complexities of multinational operations. If your company has operations around the world, one of the questions you probably face is how do you know if something's going wrong in another region? There are a few ways to get a handle on how international operations are controlled. One is to look at internal audit and how they are risk rating the operations around the world, and also how often they're visiting the operations around the world. On the external audit side, one thing you can also check is the relationship, and the reporting relationship in particular, that the independent auditors in local areas have with your overall independent auditor. Number 8 in our top 10 list are complex transactions. These are things like derivatives and taxes. And if you don't have someone on your audit committee with a deep background, it's hard to be confident you're asking the right questions. Make sure management's giving you clear and simple answers. Figure out whether or not you want some kind of white paper that better describes the background to the transaction. And third, make sure that you understand the business reason behind the transaction. Number 7 on our list are key changes to the business. The economic environment has really provided a challenge to companies, and we've seen a fair amount of downsizing and even offshoring. So the question audit committees are asking is what impact has that had on the internal control structures, and has that had any impact on tone at the top, particularly if there have been key management position changes. On the other side, we've also seen a number of companies actually begin to accumulate key amounts of funds, and they're looking for acquisitions. And so as your company is perhaps acquiring other companies, think through the impact on the company's risk profile and what impact that's going to have on financial reporting. Number 6 on our list is ongoing economic uncertainty. It seems lately that for each positive indicator, there are negative indicators or offsetting indicators. The other aspect is that between 2012 and 2014, over $400 billion of corporate debt is coming due. The bottom line is that it's too soon to relax our vigilance on the impact that the economic uncertainty is having on business. Number 5 are substantial changes to accounting standards that are on the horizon. By 2011, there are going to be a number of key standards that are going to be changing, everything from revenue recognition to leasing to financial instruments. The finance departments at your companies are already sort of struggling with addressing the challenges from the economic environment as well as new regulation. And the question is, do they still have the bench strength and the capacity to deal with some fundamental financial reporting changes that are going to impact not only your financial statements, but also your business and your operations, including your IT systems? Number 4 are significant regulatory changes and changes to the regulatory environment. The Dodd-Frank Act is actually going to drive more than 500 new rules, and the question will be, how is management understanding which rules impact your company and how the company is going to react to those? Number 3 is the increased focus on enforcement by regulators. We've seen a skyrocketing number of prosecutions on the Foreign Corrupt Practices Act. We've seen a lot more activity by antitrust regulators, particularly if you look at what's happened over the last few years in Europe and their focus on the technology industry. We're also seeing a lot more cooperation cross-border between taxing authorities, and we're also seeing the SEC substantially increase its resources and its enforcement staff, and it will be also coping with the fact that the Dodd-Frank Act calls for new whistleblower provisions, and those will increase again the number of enforcement actions and number of investigations the SEC is conducting. Number 2 is risk management. This is obviously an issue that's been in the spotlight. Not only did we see the start of the new proxy disclosures on the board's role in overseeing risk, we see a lot more scrutiny on the link between compensation and risk. We see directors particularly concerned about the unknown risks in their companies. And for the Audit Committee's part, we see a lot of concern over how the Audit Committee can fulfill its responsibilities without being tagged to oversee all the risk in the organization. The number 1 on our list is risk management. In the same way that real estate is location, 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 the Audit Committee's focus is often these days on risk management, risk management, risk management. And that theme actually does tie back through our list, everything from international operations to enforcement activities to dealing with economic uncertainties. All of these really come together for the Audit Committee and focus very much in the risk management area. Putting together any list is always a challenge when you're trying to figure out what to include and exclude. We hope that the list we've put together will help you be a more effective Audit Committee in focusing in on some of the key areas we see as challenges in the upcoming year.
Catherine Bromilow can be reached at catherine.bromilow@us.pwc.com. The Board Governance Series is a presentation of corporate board member in NYSE Euronext Company.